Green stocks sell-off develops as Tesla opinion sours. The sell-off from green stocks is set to go on through 2024, prompting a fourth back-to-back year of misfortunes, as indicated by Bloomberg's most recent business sectors live heartbeat overview. Generally read from Bloomberg. The negative feeling shows up prone to inundate an extensive variety of green resource classes, with Tesla Incorporated giving off an impression of being at risk for losing its place among the 10 biggest stocks in the S&P 500. Almost 66% of the 620 MLIV heartbeat respondents said they intended to do as such. Avoid the electric vehicle area, and 57% expect the iShares Worldwide Clean Energy Trade Exchange store, which is down almost 30% this year, will expand its decrease in 2024. The desolate situation comes as green financial backers wrestle with the shock of exceptionally exorbitant loan fees in a post-pandemic world. What's more, there is preceded with political reaction in numerous U.S. states as well as a developing administrative scenery that can possibly uncover greenwashing and further harm valuations. Visit Renders, who has been a supportable financial backer for a long time, calls the decrease in green resources a turning point for the business. He said the promotion encompassing green intends to assist with combating environmental change has driven a few financial backers to turn away from customary monetary measurements, for example, supply, request, and asset reports. We will think back and say this was a time of remarkable hypothesis, said Renders, who was prime supporter of Renders. McVeigh Capital Administration in Boston manages about $3.5 billion. Whether it was image stocks or green stocks, everybody was showcasing and selling very hard. Despite the fact that MLIV heartbeat respondents are extensively joined on their cynical perspective on green stocks in the close to term, the image is different when the time skyline is broadened. Most respondents expect they should shield portfolios from environment risk before long. Garvin Jabush of Green Alpha Councils in Louisville, Colorado, said the ongoing sell-off addresses an impermanent turn of capital away from sustainable power. Ecofin President Brent Newcomb, who oversees about $2 billion from London and Kansas City, said he sees the market decline as a purchasing an open door and he is expanding his situations in utility stocks. What's more, Bill Green of Environment Versatile Framework in Plant Valley, California, expressed taking a gander at the worth of public sun-based or wind stocks and reasoning that the energy progress has slowed down as an alert. Public business sectors are very unpredictable and, in our view, they have gone overboard to increasing loan fees and production network difficulties, he said. Yet, timing the flood is demonstrating troublesome. Financial backers focusing on natural, social and administration objectives were anticipating that a meeting this year due should memorable degrees of help as bundles like the U.S. Expansion Decrease Act. All things considered, many years of high expansion and increasing loan costs hurt numerous customary ESG stocks, with wind and sun-oriented energy among the greatest failures. Many clean energy organizations are capital serious, making them more helpless against higher getting costs than oil and gas organizations with deeply grounded apparatuses and stages. To exacerbate the situation, wind and sun-oriented makers have been hit by production network disturbances, wrecked plans and undertaking delays because of increasing expenses. The following green resource class expected to see a decay is EVs, as battery-fueled vehicles remain excessively costly for some families battling with the drawn-out impacts of expansion. Tesla shares rose almost 140% this year to a July top, however have fallen around 20% from that point forward. Quite a while back, Tesla was esteemed at $1.2 trillion, making it the fifth biggest organization on the S&P 500. Its reasonable worth has since fallen beneath $800 billion, making it the eighth biggest organization in the benchmark file. Almost half of MLIV heartbeat respondents anticipate that it should drop out of the main 10 1 year from now. Tesla financial backers are likewise sorting out some way to answer a CEO who consistently stuns markets with exceptionally questionable online entertainment eruptions. However, the speed of environmental change is constraining an inescapable shift toward green innovations, which requires more prominent speculation. As per Barclays plc experts drove by Maggie O'Neill, the following year is basic for the execution and restoration of decarbonization focuses, as the Paris understanding decarbonization endeavors require extra, front-stacked, net speculation. With 2023 prone to be the most smoking year on record, and 2024 liable to be similarly hot, transformation and decarbonization will stay in center.